There are certain financial indicators that are interesting, others that are important, and there are few that are critical. But overall, we need to see all of them and continuously keep up with them to be able to determine the direction of the markets and assets. Take a look at this. You came here for the truth, so let me unveil that for you. I want to begin with this 10-2 interest rate spread. So we are looking at the 10-2 year yield, and it's an important indicator for technical analysis. And you will see that in these previous instances, what came next? Of course, well, the shaded area is your recessions. And every time this occurs, we have a recession. Okay? Looking at this going back to 1979, this rings true. And so we have many examples of this occurring. There is the warning zone, and then there is the recession zone. And at this moment, we are in the warning zone, already there. Looking at our previous financial crisis, it barely needed to get into that recession zone. And now, we are just maybe months at most away for this to enter that recession zone. Does it mean 100% that we will be in a recession when it gets there? No. There are a lot of things that they may do. But at least this indicator would then be out of step with the previous 4 instances. That would be an anomaly because it's not 1 or 2. I mean, we're talking about 4. And it's following the same pattern it did before. So when I see something like this, where it repeats the exact same pattern over and over again every time, then we have to start looking at it and thinking, okay, this is a pretty good indicator. Maybe I don't necessarily agree with it and I prefer to look at the fundamentals and I like to look at other things and this and that. But when I see something like this, it really catches my eye. I know what a lot of individuals out there might be thinking, I don't care about spreads, I don't care about yields and all this stuff. All you need to know is the way this chart looks and understand that every time it gets to where it is now, it seems to fall further into that recession zone, and then we actually have a recession. Well, no need to worry, because the debt situation is under control. Oh, wait a minute. No, actually, it's $174 trillion based on this here. Looking at this, it's absolute insanity. How will they ever be able to control this? There's no way. 382% of the GDP. Trillions of dollars. I mean, I look at the numbers and I have to sort of, is that correct? I'm always second guessing myself. Trillion, is it possible? But that's the way it is. $174 trillion. The World Bank, the IMF, the AIIB, the Fed, and all central banks around the world, the biz, everybody, they couldn't bail this out, even if they all collaborated and give it all that's possible. They would simply inflate the currencies into oblivion. But I'm sure we'll all enjoy the fireworks along the way. Fed funds rate versus the LIBOR. Take a look at this. you'll see this LIBOR is the blue, rising up, the Fed funds rate as well, and compare that to the S&P 500 and what has happened. Again, previously, these did the exact same thing leading up to the financial crisis. Do you want to take a guess? Do you want to take a guess what happened? Well, sure. The market crashed. Wow. Couldn't see that coming. The exact same thing is happening today. Now, we're at a lower level for the Fed funds rate, for the LIBOR, but understand that in every previous instance, it's seemingly that it doesn't necessarily get a chance to go back up. It's always sort of heading down further and further, and then it hit the bottom. So where's it going to go from here? Well, the Fed funds rate has barely come up. And it's not going to be able to get to these levels before without hitting rock bottom. They're going to have to come up with something else. Now, I covered this here on the channel. I'm glad that many people watched this video and my others that have done related to it. And they are talking here in this article about the petro yuan. China's launch on Monday of its crude futures exchange will improve the clout of the yuan in financial markets and could threaten the international primacy of the dollar. According to this new report, this is the single biggest change in capital markets, maybe of all time. That is some bold words there, definitely, because if it's challenging the petrodollar, truly, if it was challenging the petrodollar, that's something we haven't really seen in decades and decades and decades. The launch of the oil futures denominated in China's renminbi currency, also known as the yuan, is China's first commodity derivative open to foreign investors. They've been trying to do this more. They've been trying to open their markets. You've seen their president come out and say, I said president, I meant emperor, say that, we want to open to the world. This is all coming at a time, of course, when there's tensions back and forth. So it's interesting. Anyway, now I want to switch gears quickly just to cover two very quick points. Working age population in Germany. Now, Germany is suffering the same problems as many other European countries. You look at the same thing in Japan. In fact, everywhere, excluding India and the continent of Africa, this is the exact same thing to different degrees, and that is a severe decline. This is declining as years go on. We've already reached a peak and started to slide downward. You could see the replacement rates are not high enough, and that's something to note. It's something significant because we have to worry about what the future has in store. We have all these different Ponzi schemes and social assistance programs that are there to support people, but unfortunately, they can't unless they come up with something else. I mean, they're going to have to give in with this whole universal basic income and just print the money and destroy the currency into confetti, but nobody seems to care about that. No worries. German population without migration. All right, take a look at this. Seems like this is quite significant. You look at it over the next few decades, and Germany seems to be losing a lot of population. So that's why perhaps pushing for that, and I'm not going to have an opinion on it, but essentially we need to understand how the government works in terms of taxation. They need more people coming in, and they have to take more taxes every single year. Not sure if you noticed that pattern. I don't know about you, but surely for me. Constantly increasing taxation. More wealth being stolen from individuals. More regulations upon us, making our lives more difficult. And ultimately sucking us dry. And they do so intentionally to make sure that we are in a state of poverty and dependence on government. That's the goal. They are succeeding. I will tell you right now, they are definitely succeeding. And ultimately, what's going to happen here is the Federal Reserve, the ECB, the Bank of Japan, Bank of England, all the central banks are going to have to gather together, create a new monetary system as the current monetary system is completely destroyed. That is the end goal. That has always been the end goal, and the new monetary system is, of course, the predefined solution. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you are supporting this channel, so I do appreciate that very much. Don't forget to hit that subscribe button. This channel has exceeded 100,000 subscribers. I want to say hello and thank you to all of you. And if you found the video informative, I know that you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. All you have to do is click on the link in the description. It'll bring you over to Amazon. They have a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.